country will know soon if it will be granted a loan from the IMF. This is the International Monetary Fund. Government applying for a $4.2 billion loan for COVID-19 emergency funding. And the state has said that these special loans won't include the usual terms. Let's find out exactly what then the possibilities of what South Africa will be signing up for will be. We're joined by political economist, Professor Patrick Bond. Professor Bond, good evening. There was, of course, great contestation within the Tripartite Alliance itself over approaching an institution like the IMF for further bailouts, and there seem to be big questions around whether or not South Africa will be signing away its sovereignty. Now, of course, many acknowledge that the way in which the IMF does its work has changed significantly since the 80s and the 90s. But are there still issues of concern in terms of what the terms of those contracts will actually be?
Well, it's particularly that split the alliance between what you might call a neoliberal bloc that you'd find in Treasury and the Reserve Bank, and the more, let's say, Keynesian, or that's the reference to the 20th century economists from Britain who helped the world get through the Great Depression by spending more. So that's the classic division that you find, where the Communist Party, the trade unions, and some part of the ANC have been more open to, let's say, expansion and higher debt. So Finance Minister Mboweni and Reserve Bank Governor Kganyago have been having a very, very tight regime. They say there's a big fiscal and monetary stimulus, but it's not really compared to the rest of the world. And the IMF loan will amplify that. And you're exactly right to say it's one of those wedge issues that really splits our ruling party. And it's going to be played out. Certainly the loan will come through, but it's not only the IMF at $4.2 billion, 70 billion rand. It's also the African Development Bank last week with a $5 billion loan, the BRICS New Development Bank with a $2 billion loan, the World Bank with a $14 million loan. And, you know, before you know it, we're talking real money. That's $200 billion in foreign debt that we're hitting now. And in retrospect, the Keynesians, who are seen to be more responsible because they don't want us to be in foreign debt so much. It's a very risky situation, as you say, to lose your sovereignty to foreign financiers.
One of the concerns, of course, is what happens to this money. We seem to be battling with a bottomless pit of money that ends up taken from the state and is unfortunately lost to corruption. And there are big questions around whether or not the conditions for this money that were being given would need to come with any kind of guarantees. So would the IMF be asking questions around the security of whether this money will be spent on COVID-19 funds?
So the critics will certainly point to a problem. We could call it PPPs, Public-Private Pilfering, or even Plundering, because that's where we've seen major state contracts during COVID-19. But, you know, long before that, and this is obviously going back to apartheid era, in which this corporate malfeasance, which is one of the very highest in the world, it's ranked number 2nd in economic crime, Sant and Stellenbosch by PwC in its biannual ratings. And it got so bad that about 3 years ago, the head of the Treasury's procurement office, who was meant to be doing exactly what you say, cutting down on the looted money, he had assassination. His name was Kenneth Brown. But he said before he resigned that between 35 and 40% of the contracts that he was looking at were subject to overcharging by corporations. So bringing the state back in for insourcing of workers is one of the trade union demands as a result of this record of the PPPs, public-private pilfering or partnerships. And I think that would be one of the questions that the unions are asking. If we're getting all this money and we desperately need more income support for poor people, and the massive new unemployed, right? We also need more food parcels. We need more PPE, the protective equipment for health workers. We need more funding to make the economy strong enough to withstand the private sector. I mean, we're looking at a depression, worse than 10% decline in our GDP this year. So then you do need money. But then these critics of the IMF, I think, are correct to say, do we need US dollars? Aren't we spending most of the things I've just mentioned in local currency, in rands? Why do we need a dollar which needs to be repaid with dollars. And as our currency goes down, the cost goes up. So today, the IMF is giving us a loan at 1.1% interest. That sounds great because, if you go to the international markets, you're paying 8.5%, 9%. But the point is, when your currency declines, what looks like a good deal, 1.1%, actually you have to pay back in rand, and that means the effective interest rate is going to be double digit.
Do we have enough transparency in terms of these contracts that are being entered into about what would really be at stake here for the country, especially when it comes to the repayment terms of these loans? So how much are we tying up our future generations when it comes to the situation that we're in now?
That's an excellent question, because sovereignty doesn't just mean that the IMF kind of secretly behind the scenes manipulates what the Treasury, what the Reserve Bank are doing now. Some might say, okay, we've already seen evidence of exactly that in the January Article 4 consultation. That's what the IMF does every year. They visit and they write something called the Article 4 consultation statement. And there you see in January this year already the austerity, including the cuts on civil service pay, 160. Finance Minister Mboweni announced in February. And that is foreshadowed in exactly what you said, a sort of secret behind the scenes closed door meeting. The nice thing is that advocates of transparency have forced the documents into the open. Anyone can go to the website, imf.org, and look at what the IMF is expecting South Africa to continue to commit for future generations, which are budget cuts, austerity. And, it got so bad that in February, just a month after the IMF visited, Finance Minister Mboweni cut the health budget by 3.9 billion rand, even knowing that COVID-19 was coming down like a train on us. So that's the kind of pressure we're under. Look, it's not the IMF alone. It's the Standard & Poor's, Fitch, and Moody's credit rating agencies. And it really is because we've got a $185 billion debt, and now it's probably 200 plus. And that means the more that we're in debt internationally, even if we're running a current account surplus, we have enough money from a trade surplus. We have $50 billion in reserves. Even if we have enough money to repay loans, to cover profit outflows, the things you need hard currency for. What I worry about is the African Development Bank loan, BRICS New Development Bank loan, the World Bank loan, all of these loans that are coming in will put South Africa under the thumb of those international financiers. And, a good government would be saying, wait, what are the loans that we've inherited from apartheid, $25 billion? That's long gone. But what about the loans for the China Development Bank, for China South Row locomotives, for the World Bank, for the Medupi plant? These are very corrupt loans. And a real audit, of the loans should precede taking on new loans from those same institutions, surely.
All right.